Alright, what is up boys and girls, welcome back to another video. I am Crypto Maximalist. Please drop a like and subscribe to the channel. Before we begin, I want to let you know that I've partnered this month with ZoomX, who are offering a 20% cashback on sign up and deposit on their platform. Deposit $100 and get $20 back just for signing up. Absolutely incredible deal. Make sure to take advantage below, along with our other exchange partnerships. Let's get into the video. The rise of Bitcoin has been one of the most compelling financial narratives of the 21st century. From its enigmatic origins to its volatile yet upward trajectory, this decentralized digital currency has captured the attention of technologists, investors, and the general public alike. The question that frequently arises, often framed with a mix of hope and skepticism, is whether acquiring Bitcoin today represents the opportunity of a lifetime. To address this requires a comprehensive professional deep dive into its history, technology, economics, and inherent risks, examining the intricate details that underpin its potential value and the significant challenges it faces. As Bill Gates said, Bitcoin is a technological tour de force. At its core, Bitcoin emerged from the ashes of the 2008 financial crisis, introduced by Satoshi Nakamoto through a white paper outlining a peer-to-peer electronic cash system. The fundamental innovation was the blockchain, a distributed immutable ledger that records all transactions publicly and transparently, secured by cryptographic principles and a decentralized network of participants. This structure eliminated the need for intermediaries like banks to verify transactions, offering a vision for censorship-resistant, borderless monetary transfers. Understanding these foundational details is crucial to appreciating Bitcoin's disruptive potential. Initially, Bitcoin was a niche interest for cryptographers, cypherpunks, and early adopters fascinated by its technological elegance and philosophical underpinnings. Its value was negligible, often exchanged for trivial goods or services. However, as the network grew and more individuals recognized its unique characteristics, particularly its fixed supply capped at 21 million coins, the narrative began to shift. This scarcity, hard-coded into its protocol, stands in stark contrast to fiat currencies, which can be printed by central banks, a key detail that proponents argue makes Bitcoin a superior long-term store of value, akin to digital gold. The journey from obscure digital artifact to a global asset class has been marked by extreme price volatility. Bitcoin has experienced multiple boom and bust cycles, capturing headlines with parabolic rises followed by sharp corrections. These fluctuations are influenced by a complex interplay of factors, including media attention, regulatory news, technological developments, macroeconomic conditions, and shifts in investor sentiment. The details of these cycles reveal a market often driven by speculation and emotional trading, and a persistent upward trend over the long term when viewed on a logarithmic scale. A significant turning point in Bitcoin's evolution has been the increasing interest from institutional investors. Initially wary of its unregulated nature and volatility, major financial institutions, corporations, and asset managers have started to allocate capital to Bitcoin. This shift has been driven by several factors: a search for uncorrelated assets, a hedge against potential inflation fueled by quantitative easing, and growing recognition of Bitcoin's potential as a legitimate asset class. The approval of spot Bitcoin exchange-traded funds in various jurisdictions, particularly the United States, represents a landmark development opportunity, providing easier access for traditional investors and integrating Bitcoin more deeply into the regulated financial system. Analyzing the details of institutional adoption, such as direct corporate balance sheet allocations or wealth management product offerings, highlights a mature market structure. Proponents who view Bitcoin as the opportunity of a lifetime often focus on its potential for mass adoption and its unique properties in a digital age. They argue that as the world becomes increasingly digitized and interconnected, a decentralized digital reserve asset makes logical sense. The narrative positions Bitcoin as a potential hedge against currency debasement, political instability, and centralized control. They point to its growing network effect, increasing hash rate, and ongoing development of scaling solutions like the Lightning Network, which aim to facilitate faster and cheaper transactions atop the main blockchain. The long-term potential, they argue, is for Bitcoin to capture a significant portion of the value currently stored in traditional safe haven assets like gold, or even serve as a global reserve asset in the future. The economic details regarding its fixed supply and predictable issuance schedule are central to this bullish outlook. However, a professional assessment requires overall consideration of the substantial risks and counter-arguments. Despite its increasing maturity, Bitcoin remains a highly speculative asset. Regulatory risks are paramount. Governments globally are still grappling with how to classify, tax, and regulate cryptocurrencies. The possibility of stringent regulations or outright bans in major economies remains a significant uncertainty, and the details of potential government actions are constantly evolving. Technological risks, while less crucial for Bitcoin's core protocol, which have proven remarkably robust, exist at the infrastructure level. Exchanges and custodial services have been subject to hacks and failures, resulting in significant losses for users. Furthermore, the energy consumption associated with Bitcoin mining, primarily reliant on proof of work, is a significant environmental concern and a point of contention that could attract further regulatory scrutiny or public backlash. While the energy mix for mining is shifting towards renewables, arguments are made about its potential to incentivize renewable energy infrastructure. The environmental details remain a hurdle for broader acceptance. Competition from other cryptocurrencies and blockchain networks are also a factor. While Bitcoin maintains its dominance as the largest and most recognizable cryptocurrency, other projects offer different functionalities, scalable solutions, or consensus mechanisms. The long-term competitive landscape remains uncertain. Moreover, the potential for market manipulation is relatively less. Liquid markets compared to traditional assets cannot be ignored, although increasingly institutional participation may mitigate this over time. The behavioral characteristics influencing market participants, often driven by fear and greed, contribute significantly to volatility. Evaluating whether Bitcoin is the opportunity of a lifetime requires a nuanced perspective. It is undeniably an asset with unique characteristics and significant potential for future growth, particularly if it fulfills its promise as a global digital store of value. The combination of technological innovation, fixed scarcity, and increasing institutional adoption presents a compelling case for its continued relevance and potential appreciation. The details surrounding its protocols, network effects, and macroeconomic tailwinds paint a picture of an asset still in relatively early stages of adoption compared to traditional markets. Thanks a lot for joining me again today for another video. Make sure to go down below and sign up for ZoomX to get your 20% bonus and get involved with all of our other partnerships offering bonuses as well. Thanks a lot for watching.